Hello and welcome to another episode of Technical Roundup brought to you by FTX. Today we're speaking about NFTs. We've got an excellent person for this topic. We've got gmoney sharing his time with us. He's in charge of Delphi Digital's NFT fund and also a private collector, enthusiast, and expert. So, Don, this is going to be quite an interesting one for us because normally we speak to, we're on the trading, investing side. And as practitioners in the space, we kind of have that common language with our guests, which means we can push them for like good content and kind of skip past the basics. It kind of feels like this is the complete opposite of, of our normal type of show, given we're talking about NFTs.
Yeah, I mean, it's going to be an interesting one, I think, because we're going to learn something, I think, and I hope everyone that's listening to it that wants to kind of understand what's going on is going to learn something too. So, yeah,
For
very
sure.
excited.
Okay, great. I mean, we should definitely do an intro for this one. So, G Money, we talked slightly off air about your background, but sort of who are you and your, how you ended up being where you are would be a super cool intro.
Cool. Yeah. Thanks for having me on. I'm super excited to be on. Yeah. So I guess just a quick brief history of me. I'm in my late 30s. I've been following the stock market since I was 12 years old. And I originally bought my first stock when I was 14. And I had been in love with the stock market ever since. And the thing that like kind of is relevant for that is like when I was 14 was the beginning of the dot-com boom, and I bought, obviously a bunch of tech stocks. I rode that on the way up. Obviously, I didn't sell any of it and rode that all the way on the way down. And and that was like obviously a very important lesson that became apparent to me years later when I first found crypto, which happened in 2017. You know, I found out about, I had heard about Bitcoin, and I think the first time I saw Bitcoin was at 27 bucks, but I couldn't figure out how to buy it. And then I watched it run up to 1,000, and then it collapsed back to 200, and I was like, oh, this is tulips. That was a nice little bubble. But then in like April of 2017, I saw that the price of Bitcoin was starting to get back above 1,000, and I was like, all right, at that point, I was already trading professionally, my own account for about 10 years or so, and I understanding price action. I was like, all right, this is interesting. The fact that this is back up here means something, and I should take a look into it. And I found Ethereum, and I subsequently partook in the ICO boom, the mid to late cycle of the ICO boom of 2017. But then in 2018, in Q1, I was like, blockchain tech is really good. But using my experience from the dot-com bubble of realizing that, the dot-com bubble was great, but the promises of that bubble, took 7 to 10 years for the internet to really develop the way that, we really experience it today. I said to myself, blockchain tech is going to be 7 to 10 years out. So I sold anything that was liquid, and I just continued back to trading stocks professionally, full time, while still keeping an eye out on crypto, but just not being super active. And then in March of last year, when Jerome Powell said he was going to print unlimited money and buy everything, that was the first time I bought Bitcoin in about 2 years, 3 years, I guess. And I started paying attention to crypto again. I had a couple projects that I had invested in that were starting to unlock, and I was like, wow, like people built stuff very, very quickly. It took 2 years to build things as opposed to 6 to 10 years like I had originally thought. And the first time I used Aave, I was like, wow, this is literally a game changer. And I went down the DeFi rabbit hole like pretty much everybody else, and I was, relearning everything that I had missed during my time off. And it was in late August, early September, that I fell down the NFT rabbit hole. And I had heard about NFTs over the summer, but I was just super busy relearning, going down the rabbit hole on DeFi, that I just didn't have the time for it, like pretty much everybody else, right? And so when I found out about NFTs, they immediately made sense to me, simply because on the first day of quarantine, I bought a PlayStation. I hadn't played a video game in over 10 years, and I ended up downloading Fortnite because I want to hear what, everybody was talking about. I download Fortnite. I start playing Fortnite with my friends and their 12-year-old nephews. And the first thing that these kids ask me is, what skins did you have? And I'm like, these skins, like, there's no way I'm buying a skin. This game's free to play. I'm not spending any money on a skin that doesn't give me like any extra special powers. But then, like 2 or 3 weeks later, I'm buying any semi-cool skin that I can buy. Like, interestingly enough, I've been traveling Europe now for the last couple of weeks, and there was a Rick and Morty skin that came out on Fortnite about a month ago, and I knew I wasn't gonna have time to play it, so I just paid up to level up to make sure I got the skin. And there's like no extra utility on it. I just am a huge Rick and Morty fan. But I realized then that these kids, they're 12, he's 12 years old right now, but in 10 years, he's going to have his own disposable income. And he's going to be totally okay with the idea of owning something in a totally pure digital asset, no physical form needed. And so I was like, all right, there's going to be this massive super cycle. I don't know how to take advantage of it, but it's something worth keeping an eye on. And this is before I knew what an NFT was. And then this becomes pertinent in September when I find out about NFTs. And as I'm spending time on like NFT Twitter, in Discord, on Telegram, I'm realizing that your profile picture is your skin. And the cool thing that you can do with your profile picture is show off one of your NFTs. And generally, the people that were the most knowledgeable and probably, let's say, most successful, especially in the NFT space, generally had CryptoPunks as their avatars. So as I was going down the NFT space and going down the rabbit hole, I realized I got red pilled on punks, and I was like saying to myself, all right, the beautiful thing about this is like the beautiful thing about NFTs in general is that there's so much convexity in them, right? Because it's like last cycle, at the end of the cycle, people were saying when Lambo. And I was like saying to myself that at the end of this cycle, we could be living in a world where people would be saying when punks. So to me, like, it made so much sense to invest in like punks and other what I thought were AAA NFT projects because of the convexity of the trade, right? Like, you're basically buying a call option on Ethereum, right? Because as ETH would go higher, and people became richer off their crypto gains, they would be spending that money in terms of crypto as opposed to they would always be spending money in the real world as well. But if you're talking about a digitally native person that spends a lot of their time online, what better way to show it off than with a picture that you can verify exactly how much I spent on it, right? Which is kind of the way humans interact and put themselves on in their social circles and display social status, for better or for worse, but that's just human nature. So that's kind of when I realized that I ended up buying a punk in December, a zombie, and then I was looking for an ape, which I ended up buying in early January, and I wrote this long Twitter thread about it that went viral on crypto Twitter, and that was kind of like the genesis of gmoney and how I started making, I guess, a splash in the space.
So basically using NFTs as a status symbol mostly?
Yes, well, I mean, it's just when you think about like the way humans interact, right? It's like humans like to display status, whether for better or worse. So that's just human nature. And just understanding that even though we were being behind a computer, it doesn't change the psychology of how we interact with each other, right? Like, any luxury brand out there, you can buy like a pair of Gucci loafers for whatever, $500, $700. It costs them probably under $50 to make. So, what you don't get any extra utility out of buying a higher price or a luxury item, but it does say something about you to your peer group if you own a designer brand as opposed to a non-designer brand.
Yeah, that makes a lot of sense. And again, the analogies with video games, I mean, Fortnite, the CSGO skins, also, these are like huge multi-billion dollar industries. And so most people's familiarity with NFTs comes via analogy with where they've seen them before, video games being a big example. If we take a step back and just the term itself, NFT, non-fungible token, I mean, crypto natives will be obviously aware of tokens, but then the non-fungible bit might be new, confusing, or worth defining. So if we go all the way back to step one, what is a non-fungible token? Specifically, what are the properties of non-fungibility? What does it actually mean?
Cool. Yeah. So the best way I describe it that I think helps the most people understand it is if you own one Bitcoin and I own one Bitcoin and we exchange Bitcoins, we both have the same amount of value. And that's the same thing for like a US dollar or a pound or whatever currency. But if you own a t-shirt and I'm wearing a t-shirt, if we exchange t-shirts, we don't necessarily have the same value, right? Because the difference is in who makes it, what's it made of, are there holes in it, what's the wear and tear. So that describes the non-fungible aspect of it, right? Is we could both be wearing shirts, but they aren't necessarily worth the same amount. And that goes for anything, right? So it's like everything in the world is a non-fungible token, because everything in the world, like at some point, has some sort of alteration that happens to it that could change the value for better or worse. And that's kind of the best way that, like, when I realized that, like, it was kind of like a light bulb that went off. That's like, okay, cool. That really helped me conceptualize what an NFT is. It's like, hey, like a house is an NFT, a mortgage is an NFT, a contract is an NFT. So when you think of it in that terms, it makes it a lot easier to digest from a totally digital aspect.
Okay, so I mean, yeah, that makes sense to me. In general, like I've been struggling around the NFT kind of concept myself, because I mean, just as like a background thing, like whenever I play a game, I never buy the skins. I never like buy like expensive art, any of that sort. Never been into it, but it makes sense to me from like a collector's kind of position. But do you think there's other kind of ways to use NFTs? Do you think there's just this use case of, okay, showing off or collecting, or do you think there's more to it?
The thing that makes me so bullish on NFTs is that I think if you're going to be bullish on, let's say, a digital future, and if that digital future will be decentralized through blockchain, you have to be bullish on NFTs, because as more things will come on chain, they will all come on chain as NFTs, right? So, uh, with regards to where do I like, I think because I think everything is an NFT, and I think as more things come on chain, I'm super bullish on them. One example to your point, that I did, because I'm always trying to just push the edge of what are we doing with NFTs, how do we move the space forward, is there. I'm not sure if you guys are aware, but last Friday, Gary V bought an ape, another ape, CryptoPunk ape, another ape got bought within, like, I think an hour or two. Two zombies got bought, and then somebody swept the floor for 100 punks. And so what ended up happening was there's obviously a ton of demand. Like, people are FOMOing into things. I have about 8% of a sharded ape that's trading on Niftex. And I had people earlier in the week reaching out to me, telling me that they had expressed interest in buying that ape. And obviously, after those other apes got swept, they started reaching out to me like, hey, like, I'd like to buy the position at like a higher percentage, or at a higher amount. So what I ended up doing was I took my ERC20 tokens, which represents about 8.5% of the sharded ape. I put them into a NFT wrapper that is on the Charged Particles protocol, so that position could be represented by the NFT. And then what I did was I listed it on OpenSea as a Dutch auction, starting from a really high price to a lower price, to see if somebody would be interested in buying out that position, because technically my position is an NFT, right? Like, because I own 8.5%, not everybody owns a differing amount, but I was willing to sell my 8.5% as a block trade. It's basically a structured product uh, that was representative of my ERC20 position, but it's an NFT, and, like, was easily transferable, right? As opposed to necessarily having to do like an OTC deal and work on an escrow and stuff like that. So I do think that there's a lot of thing. Like, I think collectibles and art is just scratching the surface, but I really do think that, you take a look at structured products in traditional finance, and that's probably bigger than like equity markets, right? Like the bond markets and all the esoteric stuff that gets done. That stuff, as it comes on chain, like, is going to be great, right? Because it's like you're going to be able to not have to deal with all the, like, the financial meltdown of recollateralizing loans, and all this scary stuff that basically brought the financial economic system to the brink back in 2007, 2008. And now, if we can see stuff on chain, you can kind of see in real time, with real marks, what's happening, right? And like, that to me is like super interesting. It starts with the art and the collectibles, because you're obviously not going to bring trillions of dollars on chain because on an untested protocol, right? Like it's going to start small, and like we see that with DeFi, right, where the TVL starts off really small, and as over time people become more comfortable, more assets, more TVL comes on chain, and I think you're going to see the same thing with NFTs. As the protocols prove themselves, we're just going to get more and more valuable stuff coming on chain.
So essentially, if I had to try to summarize that potential use case, it's some form of verifiable fractionalization of property rights or some sort of equity interest, and that NFT wrapping process is verifiable and much easier and more efficient than the whole custody broker middleman type of arrangement. Is that broadly correct?
Yeah, I mean, exactly, right? Like, I think that NFTs kind of give us digital property rights and a way to transfer them, obviously electronically with no middlemen and no centralized database.
That makes a lot of sense to me. Yeah, I think I'd very much like the argument that art is just obviously kind of, all the collecting is the low-hanging fruit, if you will, and then the more, but it creates this network effect, which then opens people's eyes towards more sophisticated use cases. Is that broadly the direction you see the market heading with? So art is just the starting point, and then
Yeah,
the real use cases emerge a bit later.
yeah. I mean, listen, I think art, there definitely is a real use case there, right? We've seen, I think, a really fast and quick disruption of the art market. But again, like I think that to think that it's just art or collectibles is a very narrow view of it, right? Like I could see a world, whether it's 5 years from now or 20 years from now, your guess is as good as mine, but where we have mortgages on chain and then we have regionalized CMBS indexes on chain that are fractionalized versions of all these NFTs, right? Like that's just like a long-term view, right? Because a mortgage is an NFT. So it's like you can be you can use your imagination as much as you want, right? Like it's, if you have an idea and you can bring it on chain, I think NFTs really provide you with a lot more optionality than like your just regular ERC20 type token does.
Yeah.
Yeah, that makes like one obstacle that comes to mind, which we've discussed with guests when talking about DeFi, is that the creative use cases for tokens are limited by virtue of a lack of recourse to real assets slash the legal system, which is why crypto is so generally over collateralized and so on and so forth, because there's that breaker where you can't, if the legal system doesn't recognize these structures, or if as a lender you've got no recourse to them, your risk management or lending policies are going to look completely different. Do you think this current limitation is a permanent one, or B, just applicable to NFTs as well? So talking about mortgages and property rights in the real world, do they need to kind of break that threshold and create a link between digital assets and then something recognized by the legal system?
Yeah, I think that at some point we're going to see them linked together, and you're probably going to have, like as I've thought about, let's say mortgages, it's like at least for now, you need some sort of like trusted source that can like, if we're trading an NFT of a mortgage, there has to be some source that almost like like a bank that's like, we guarantee that this mortgage is backed by this asset in the real world, right? I think over time we'll probably end up getting some sort of automated smart contract feature that will have it linked much quicker and without some sort of middleman. But I think it's kind of be like in stages, right? Like we're going to go from fully physical, which was 50 years ago, and we're just getting more digitized slowly over time. And obviously technology moves much quicker than bureaucracy, so we just need time for the legal system and the legislative system to catch up.
Yeah, that makes sense. Going back to the art, do you think that in general, like, because you talked about like the NFT space growing over time and the art space kind of just being the start of it all, do you think like the current projects, like as the first movers, are kind of like a bet of the NFTs in general? Like if the NFT system or like the NFT, whatever you want to call it, the NFT world just grows and grows, the first ones are just going to be valuable, and that's why like we see punks and stuff like it appreciate so much. Why do you think it's like
Yeah,
ballooning
so
so big?
Yeah, so part of my thesis of why I liked punks, why I liked art blocks, why I liked Avastars, like all these like uh, tier one first generation projects, is that especially at the time, like a year ago, we the NFTs weren't even on the map. It wasn't even on the discussion. So I said to myself, hey, okay, if I look into the future and I think of maybe 50 or 100 years from now, what are the odds that there is a NFT crypto art wing at the MoMA or at any major museum around the world? And I said, I think that could be pretty high. Uh, if if there were to be that kind of wing at that museum, what would be in there? And at the top of that list to me was CryptoPunks, right? Like I had seen just the way the community had grown organically, that people were just really passionate about it. Like when I first got into NFTs, I like it took me like another 2 or 3 months before I even started considering CryptoPunks because I wanted to find the next CryptoPunks. Like pretty much, I mean, I see that journey with pretty much everyone that comes into the space where they're like, oh, like punks are too expensive. And when I got into the space, I think the floor of a CryptoPunk was maybe somewhere between 700 and $1,200, and I was like, that's too expensive. I want to find the next punks, and it wasn't until like a couple months of going around being like CryptoPunks are it, right? Like they're not the first NFT on Ethereum, but they are one of the first, and they had a really organic community grow around them. They had a passionate group of people that were their advocates. And like I remember when I first went into the punks Discord, everyone wanted to help me, everyone was super helpful, and they helped, they were kind. Like I felt like felt like I was being welcomed into a family I didn't know I had. And so to me, one of those things is, you see that in the community now, and that to me is like a bet. I think now we're at a point where if let's say NFTs are a flash in the pan, and they lose relevance somehow within the next 24 months or whatever, uh, I still think that they made enough of an impact on art history that they will be sought after as artifacts of art history and digital and crypto art in the future. But I think at this point, like we've hit mass velocity, escape velocity, and like they're here to stay. So you want to be buying, there's only 10,000 CryptoPunks. There's 7, 8 billion people in the world. You do the math, right? Like there can only ever be at most 10,000 people that ever own a CryptoPunk.
Yeah, I find the punks kind of essentially network first mover effect argument to be super interesting. Very much on the art side, and that kind of raises the question in terms of NFTs more broadly, as early as it may be. Do you have kind of different mental categories for NFT owners? So recently, a lot of people have just been straight up trading them, right? Like you would anything else, straight up flipping them or buying the floor or sniping on certain discounts, so on and so forth. So is it helpful to have like mental categories of, NFT traders, NFT investors, NFT collectors? Is that a framework that's useful?
Yeah, it definitely is, right? Because you having an idea of what a person, how they view the market and what their holding period is, right? Like, if I were to listen to advice from Warren Buffett, it'd be very different than the advice I listen to from Stevie Cohen, right? Like it's these guys are just, they're both really good, but they both have very different models for how they look at the world and the market. So I think that the same thing happens in the NFT space, right? Like there's some people that will buy every project and flip them and sell them just a little bit higher, make some either some percentage or a couple turns on their money. But there's some people that are like, I'm buying this and I'm never selling this, right? Like you have the whole gamut. So I think it does make sense to categorize people into different categories, so that when you do listen to them talking, or see them tweeting something, you understand a little bit more of how they see the world.
Yeah. Yeah, I mean that's always important, right? It's something that I tend to like try to say as often as I can with my content too, right? Because as a trader, I behave very, very differently than like an investor in the space.
Mhm.
In general, do you see any other L1s kind of take market share from ETH, or do you think it's just gonna be ETH centric in general, like the NFT movement?
I think it's too early to tell. I think you have to see probably like do L1s, which L1s win in general. Uh, I think I don't know enough about the different techs to know which one I think will win. What I do know is that if I were to be spending, five to $10,000 on a piece of art or a collectible, I would prefer it to be on Ethereum than on any other chain, at least for the time being. And I'm okay with not being first onto other chains. Like, I don't get me wrong. Like, I do own a bunch of Top Shot. I love that project, and I do love what it did for helping NFTs go mainstream, and helping the broader population understand it. But with regards to other L1s, I haven't really seen a project yet where I'm like, I have to go on there and I have to buy this, right?
Yeah.
For me, for the most part, I've been sticking to Ethereum just because the projects I like the most are on there, and it might have the network effect and the first mover advantage by now, where it's like, if I'm gonna come on, like Tom Sachs did a drop last week called Rocket Factory, and I thought, he's a very big major contemporary artist. He has his stuff shown at pretty much every major museum throughout the world, and he came and did his drop on Ethereum as opposed to maybe some L2 or a competing L1. And I think part of it is because of the provenance of, if you are an elite artist selling your stuff for a high amount, generally, whether the transaction cost is $5 or $500, it generally won't deter your top tier collector.
Yeah, I like that. I mean, in general, I think it's just like trading Bitcoin, trading altcoins, right? I mean, you have like the first mover in Bitcoin, so you can be reasonably certain that it's gonna stick around, and I think that's probably gonna be the same kind of situation with like NFTs and other chains, where it's like they might work and they might like kind of get bigger as time goes on, but like the first mover is probably always gonna stick around at least for the next few years. So I agree
Right.
agree with you on that. You mentioned Top Shot, and something I've heard about Top Shot is like that they've had. I mean, Top Shot started out as pretty much the most kind of like with the most retail kind of appeal, right? A lot of people got into it that weren't even into crypto, and then the people behind Top Shot kind of started like inflating the project a little bit. That's at least what I heard, and I'm more than happy to kind of be corrected on this. Do you think that's in general a problem that could appear where it's just like people just keep on making more, or do you think in general like that's just a fringe case?
I think that like you're gonna go through like fits and starts with everybody, right? Like everybody's gonna be learning. When like I bought a lot of the first series one, and I did not really participate that much in the subsequent series because I felt that there were like a lot of cards that were being printed, and to me like that just didn't make sense from a collector's point of view. But that like so I grew up collecting baseball cards in the late 80s, early 90s, and I was an avid collector, as pretty much any kid is. And it's funny because with this baseball card and sports card boom that's been going on for the last couple of years, I would go like, so every once in a while I'll go online and I'll check to see, oh, how much is like my Ken Griffey Jr. rookie card worth. And the problem that happened with the baseball card industry in like between like 1989 to 1992, which just so happened to be also the prime era where I was collecting cards the most, is that they just printed so many cards. So those cards are all pretty worthless, right? Because they were just they were just keeping up with demand. But from a historical and collector and long-term store of value point of view, those cards end up being the worst, even though that they were just feeding into the demand at the time. So I think that like they'll probably at the beginning, because it was in beta testing, obviously the runs were really small because the community was small. But as the community is going to get bigger over time, they printed more, and maybe 5-10 years from now, the numbers printed in the series now could be minuscule compared to what's printed in the future, right? As the TAM is much bigger. I don't know enough about what's going on the executive team to have an idea of where they're going and what their view of the market is, but I'm pretty sure if they overprinted, then you'll probably see a reversion to mean where they underprint and they start finding that happy balance, right? But I think it's really hard when something's growing so fast, so quickly, to figure out the exact supply demand balance and what that number is.
Yeah, I really like that point. I think it's an important consideration and reminder that even the biggest projects, so-called blue chips, whatever, are still very new and relatively early to that. That said, if someone accepts the base thesis for NFTs in one form or another in any use case, right, whether it's just art and collecting it or the more sophisticated versions we spoke about earlier on, and let's say someone's it's piqued their interest and they want to get involved, so to speak, in the NFT space. I guess it's a two-part question. One, if we take the investor trader type of route, how does one get broad NFT ecosystem exposure? Are there like good options in terms of tokens, indices, or do you just have to buy the punks floor? And the second question, slightly more benign and less kind of tradery, if someone's just interested in NFTs and not so much like for profit, for trading, whatever, but just have an interest in the vision that you laid out, for example, how/where do they get started? Is it some Discords to join, something to read? What does the start of the journey look like?
Okay, yeah, that's a great question. I think if I were, it's funny because obviously, just like in everywhere in crypto, the NFT space moves so quickly. The first Discord I would jump into would be the Larva Labs Discord, the Punks Discord. That's a lot of, it's almost like town square of NFTs, I would say. Another Discord that I think is been really good and popping is Art Blocks, and that I've heard from a lot of like OGs from that collected punks that the Art Blocks Discord right now reminds them of Punks Discord a couple years ago. So I would say one, go into Discords. If you find a new project or somebody mentions something, go into that Discord, just learn as much as you can and just talk to people. People are really, really open. You can DM somebody on Discord if you have a question on something. Twitter, obviously, you can follow people on Twitter. And with regards to investing and if people wanted broad exposure, obviously the punk floor is whatever it is right now, $70,000-$80,000 for one, and obviously not everybody has that portfolio size. So one good way to do it is buying fractionalized tokens in punks. There's a bunch of fractionalized platforms out there. I mentioned NFTX earlier. Uniquely is another one. Fractional is another one. NFTX is one that has basically like an index. It's not necessarily fractionalized. It's a little different, but these all kind of give you a ways to get broad exposure in different NFTs that you can pick and choose, and you kind of have to do your work on them. So I think that's one good way to do it. Another good way to do it is actually to invest in these tokens, which are basically providing the infrastructure for NFTs themselves. So it's like if you aren't that confident in your ability to pick winners in an NFT project, because again, a lot of it comes down to culture and taste. You could just buy the picks and shovels, right? Like you can buy the infrastructure that allows for these things to happen, and that was part of the reason why I started the NFT fund with Delphi Digital, is because to me is I know that in order for the NFT ecosystem to thrive, that a lot of infrastructure needs to get built, much like we saw in DeFi last year, for the last couple of years, that started to really culminate last year. We're going to see the same thing, in my opinion, in NFTs going forward. So, I think right now is almost like the calm before the storm, but I think we're going to start seeing a lot of like NFT projects come to market and, infrastructure and protocol layers that are going to allow for NFTs to thrive. And that would be a good way to get broad exposure to the ecosystem as well.
No, that's an awesome, very complete answer. Well, we will be sure to leave the appropriate links for our audience in the description. As the infrastructure, as you mentioned, gets built out and the degree of sophistication rises, you generally expect usage and different and even new use cases we can't think of now to emerge as a result, right? And interesting thing I find about crypto as well is that even if you have use cases that don't work, they can very quickly start working if there's a market appetite for them, with decentralized exchanges being like a great example of this, right? Ether Delta, Crypto Bridge, like all crap, and now DEX trading and Uniswap, etc. It's like a significant part of the ecosystem. With that in mind, just in terms of a short list, we have art and collector's items, very popular now. Fractionalization of assets becoming increasingly popular as well. Blockchain gaming has seen like a lot of attention, and the role NFTs can have there in those in-game items has also been on everyone's radar. Do you think there are do you think there's like a list of blue chip use cases, if there is such a thing, for NFTs right now? Are those like the top three, or do you think we're missing anything really obvious?
So I think that we have art, we have collectibles, and right now I think we're going to see the rise of gaming really take center stage. I think with the success that Axie has had, and not just the success from like a financial perspective, but also from the success of changing people's lives in countries that would otherwise be suffering and struggling at this moment. What comes next really is your guess is as good as mine. I have maybe a thought or two of what I think it could be, but to be honest, I really don't know. Because it could just be something where somebody just, like to your point, is somebody just tweaks something a little bit, and all of a sudden, like boom, we find product market fit for something we didn't realize we needed product market fit for. So I think it's just creativity, and as people think of cool new use cases, um, it's gonna like I'm a firm believer that, like, if you take a look at the growth of Facebook and the rise of social media in the last 20 years, if you were to play this simulation over 100 different times, I think the way we get to our today's Facebook or whatever social media giant would be out there, it happened 100 different ways, because I think it was just a combination of randomness and the right things happening at the right time. And I think the same thing happens with crypto even more because it moves so much faster.
Yeah, I mean, it's kind of crazy to see, like, we had, for example, the punks, right? They kind of like went up a shitload and then calmed down, and barely anyone, at least in the mainstream of crypto Twitter, talked about them anymore. They kind of like retraced quite a bit of their move and then ballooned and went crazy again. It's just kind of how crypto works, right? You get these crazy runs, everyone is excited, and then the moment anything goes back down, people are like, okay, nice bubble. And I mean, we all have gone through that, right? That's kind of like how pretty much everyone's crypto journey is. Like, you start buying, it goes up, it goes back down, and you're like, fuck, did I buy the bubble? So like, with that said, do you think right now we're in like a bubble, given that crypto punks like sell for 100,000, 200,000, sometimes more? Or do you think that's just like they're finally getting to where they should be priced?
Well, so I was in Paris for ECC 2 weeks ago, and I went shopping on Saturday after, like, the Saturday after the conference, and as I was walking around, I developed, I swept the floor. Subsequently, a couple days later, I swept the floor of Punks because of that, and the reason why was because I'm walking around and I'm in Champs Elysees, and I walk past Louis Vuitton, and there's a line down the block. I walk into a couple watch stores, and they tell me there's a 10-year wait for watches, and to me, it's not necessarily a function of, is there a bubble in NFTs, is there a bubble in everything, right? Like, where do you think rates are going on a global macro level, right? Like, so much money has been printed in the last 12 months, 15 months, and that money is seeking out hard assets, whatever hard assets they are, whether it's a car, a house, jewelry, luxury real estate, NFTs, Bitcoin, right? All these things, to me, it's there. It's if there's a bubble, it's not specific just to NFTs. We're talking about an everything bubble, and that to me is part of like my thesis for NFTs in general. Is that if if I at the end of the day, anybody that's long any risk asset in the world is short rates. So if we're all going to be putting on the same trade of being short rates, I want to be long the asset that has the highest convexity, right? And why do I think NFTs have the highest convexity is because it's generally the smallest market where you can probably get the biggest and largest liquid position, relatively liquid position on, no matter who you are. And two is like every incremental dollar is it means that much more to like something in the NFT market as opposed to the S&P 500. So to me, it's like, do I think NFTs are in a bubble? Like they could be overextended here a little bit, but I am a firm believer in NFTs long term. And if central banks around the world are going to keep printing money, I'm okay with holding a high value asset that is highly sought after, that they won't be making more of at any time soon or ever.
Yeah, I think that the macro implications are really interesting. DeFi was similar in that at a certain point, I mean, DeFi's growth has been absolutely phenomenal, but it had its own mini bubbles along the way. And one of the symptoms, like of that mini bubble was when you just had started having clone, copycat, straight rip off, if you will, projects with nothing special, copy paste on another chain or slight alterations, whatever it is. With DeFi, we had that in food tokens, and some are now making the analogy with a lot of NFT projects going down the same road. And on top of seeing like a rock go for 70 ETH this morning, do you find it compelling to the macro trade is clear, but there will be these micro cycles within the NFT space when things get a bit too hot?
Oh yeah, for sure. I will say I do think like something that's a little different about NFTs than let's say DeFi is the personality and you feeling connected to something you own, right? Because like I was a DeFi farmer, although not the most successful one last summer, and if if there was a copycat clone project that came out that had a higher APY, there was literally I'd leave in a second, right? Like I would go over to the new project without thinking twice. But if there's a copycat clone project, and you've seen this a ton of times now with punks, where, first there were like like huge ripoffs on punks, and then there were obviously people coming up with the same 10,000 profile picture projects, kind of like every other day. But the difference is, right? Like I could feel a little more connected to my picture of an ape or my picture of a duck or a cat or whatever, because there's something that I like about it that's special to me, whereas you don't necessarily feel that with a DeFi project, right? Because at the end of the day, the only thing that matters is what your ROI is. So I think that has been a little hiccup in it, right? In the sense that I think it changes the dynamic of it a little bit, because you feel a little more attached to certain things, because for whatever reason, whether you like the art or you like the specific one that you have or you like the community. I do think, to your point, is like we will definitely be going through little bubbles here and there, and like you see it when things heat up and things cool down. But like with regards to the drawdowns, to push the point you had earlier about punks, is that the really interesting thing is you have people buying these assets that are pretty rare, that on a pullback, because I personally thought NFTs fared very well compared to crypto in general when we had that market implosion in May. And part of it is because it's going to be one of the last things you sell if you need liquidity, right? Like you're going to sell it only if you absolutely need it, because it's going to be almost impossible to buy back, let alone buy back. You're not guaranteed that you can buy it back at a lower price. So when it comes to like these, especially like you look at high tier punks, and I think you're probably going to see it happening with punks on a general level in the future, is that if I need for cash, I would much rather sell a liquid ERC20 token, and an illiquid punk or other NFT would probably be one of the last things I sell, right? Like I used this analogy the other day when I was chatting with a buddy of mine, where it's like, in the last 150 years, obviously there's been a lot of war and a lot of bad things happening in the world, and a lot of relocations of family and wealth, especially throughout continental Europe. And like we all know the stories of like the Fabergé eggs that were from a royal family. I think it was a Russian royal family, but these Fabergé eggs are some of the most sought after things in the world. That these families, it was like they could have lost everything, but they were keeping that Fabergé egg because they knew how priceless it was. And I think we could be seeing a move towards that over the long term where, hey, this is a really special NFT to me. I understand it's something special. It is the last thing that I'm going to sell. I will only sell it if I absolutely need to sell it, not a second before then. Which to me, like, kind of changes the dynamic of the whole market, right? Because the game theory really changes a lot because of that.
Yeah, I really like the implied stronger hands argument, especially by virtue of like a personal connection. But Don, I think you and I were discussing liquidity of the market before the show. Do you have an angle there?
Yeah, it's something that you actually mentioned earlier, where you said, okay, if prices go up, right, people have more money to spend, and then they're gonna be more happy to kind of spend it back in the ecosystem. Do you not think that if that kind of turns around and prices go lower, that appetite is gonna shrink and like they're just gonna behave like leverage? I know that you kind of said the opposite, but why this stark difference on the up and downside?
Yeah, no, I definitely think that if we go into a sustained bear market, you'll probably see prices correct to the downside because I think nothing will correct in equilibrium, right? We'll overextend to the upside and we'll overextend to the downside. So I definitely think that that's a strong possibility. But like I said, is like I was just saying just now, is that I think that because of the nature of some of these assets and because of the strength of hands of some of these assets, that it would be like I take a look at some of my assets, and there's certain assets I would sell, but some of them I'm holding this until, like, my ape. I hope I never need to sell my ape, and that it's passed down like as a family heirloom for generation to generation, right? And I'm sure I'm not the only person that thinks that way. So I do think that we will probably see overextension on both sides. I don't think that NFTs will outperform the base ETH or BTC on all time frames forever. But I do think that as long as if you're gonna be bullish on crypto, you have to be bullish on NFTs, and I think that that's a bet that I'm willing to make every time as long as I want to be bullish on crypto.
Yeah, I like that. With regards to liquidity in general, do you think, like, let's say we do see like a pullback or like any kind of market turbulence, do you think the liquidity is gonna kind of focus on the stuff that is near and dear to people? Like you said, you and your punks, you wouldn't really want to part, but like let's say you have another project that isn't really as important, like a smaller one. Do you think those would go first? Because that's kind of my stance, right? Like if the NFT market kind of pulls back, I think there's a good chance that the high quality stuff is gonna kind of stick around, and the lower quality stuff is just gonna go basically to zero, and then you're gonna be stuck holding something that you cannot get out of if you even if you wanted to.
Yeah, no, I totally agree with you. That's why I think that I try to focus only on like what I consider like triple A, like high tier assets, because I don't want to have to be worried about my asset re-rating to zero and or going down 90%, right? Like I'm okay with the drawdown. This is crypto. This is part of the game. But as long as like I can feel comfortable with owning something long term, and like there's a couple projects besides punks that fall in that. But it's like, would the pet rock drop that came today survive long term? I don't know. And if I wanted to take a stab at it, like I'd be taking a stab at it for really small. I wouldn't put a significant portion of my portfolio into it.
Yeah, I actually really like that perspective. When I very rarely shill crypto to my family or like talk to friends about it, usually under duress. The discussion I have is, you want like a balanced portfolio, mostly like Bitcoin and ETH. Then you can take some smaller sort of shitcoin bets or other layer ones as like single digit percentages. But I think I can see us moving towards a world where you hold some Bitcoin, you hold some ETH, and then maybe some NFTs are a fraction of like a blue chip if it's really expensive by then. I could definitely see that. One concern, though, that people have with making NFT blue chips and the whole valuation side of things is claims about wash trading, money laundering, and so on and so forth. Right? The valuations and the prices and the trading that you see even in the blue chips, isn't quote unquote real. Is this overstated? Is there a way of kind of checking whether it's real market activity or not? Where do you fall on this debate generally?
I mean, I guess I generally track the volume mostly of punks and a couple other projects, like Meebits and some other ones. And I when I see these high numbers on the board, I generally know at least one side of the equation. So, I haven't personally seen blue wash trading, or if I have seen it, I never picked up on it. I think when I first got into the space and people were saying wash trading all the time because there was less volume, but I think that I mean anybody that says that there's wash trading in punks at this point, like I mean you're lying to yourself, right? Like there's been so much volume at this point that it and like a lot of like real demand. And last week I knew like five or six buyers that were trying to buy apes, and two of them went off at like successively higher prices, and the other four were left like like oh my god, like they're scrambling to like try to buy one, right? Or they have to go down and buy a zombie. So to me, like the wash trading, I kind of ignore it. I'm sure it happens. I'm sure it happens in every industry, whether it's crypto or not, around the world. And the people that do it are obviously they know what they're doing. I just think that there's enough volume that to me it's real. And I think we've seen it with the sustained moves in a lot of these NFT projects.
Yeah, I mean, I kind of see that. I mean, I honestly like this is something that happens all the time when people are like they don't really understand something, and then they assume ill intentions, right? We have it in crypto all the time, and I mean for
Mhm.
good reason because I mean that's kind of where we came from, right? A bunch of pump and dumps and a bunch of like very shady stuff. But nowadays, I think like it's widely overstated how much of that kind of stuff is happening still, at least in comparison to the volume that we do have. But going back into like what can a beginner do if he wants to kind of move in the market, like what tools do they need to use? What data do they need to look at? What kind of sites do they go to, or should they go to exchanges? Any of that you could kind of help people with to
Yeah,
get
like a
started?
morning routine slash market at a glance type of tool would be super cool, I think, for our audience.
Okay, cool. So I'd say first thing I do usually every day is I check Twitter. I scroll down a little bit. I spend maybe 5 or 10 minutes on Twitter looking at stuff, what people are talking about. Then I'll go into a couple different Discords, chat with people. And obviously at the same time, I'm checking my DMs as people are just reaching out to me on different projects and stuff like that. But like, yeah, I think for the most part, Twitter and Discord is really where NFTs live. And so you want to be on those. Like other sites that I would say is OpenSea, obviously to see people's wallets and to kind of see collections. CryptoSlam.io is where you can go to see volume across a bunch of different projects. Rarity Tools is something people use. Degen Data, I think it's degendata.io. But yeah, like there's like a lot of different uh, I think there's more and more tools coming out every day to be able to look at things from like a more quantitative approach, because at the moment a lot of it's been qualitative, and I think over time it's going to be more quantified, if that makes sense. And I think that uh, yeah, like to me, where I see the most alpha right now is Twitter, though. If you're following the right people and you're getting into projects early, you're gonna you're not the cool thing. I think what a lot of people find refreshing as well is at the moment you're not trading against your quants, like your 3ACs, your FTXs that can out trade you and are faster than you, and have all this quantitative data on the market, right? Like a lot of it is still in its infancy, because one, maybe the market's not big enough for quants to focus on it just yet, but I'm sure they will at some point. But I think like that's like an extra edge that you have there, right? Like you're not giving up any alpha on somebody kind of to trade against you or front run you or whatever.
Awesome. Yeah, that's a very complete answer. And overall, I'm just, first of all, very grateful for your time. But I'm particularly pleased with the amount of specifics we managed to pull out of you, both with projects, tools, use cases. It's been very refreshing, and I've learned a lot. So thank you very much for that. I'm sure our audience will appreciate it as well. But unless you've got any final comments or remarks, that's it for this week's Technical Roundup. Our trader audience is now much better equipped to navigate the NFT landscape than they were an hour ago. And that's all from us at Technical Roundup, and we'll see you for the next one. Thank you, gentlemen.
Thank you, guys.